Afternoon, everybody. Welcome to TraderMerlin Show for your hump day. It is Wednesday, the 24th of July, getting near the tail end of the month, and the exciting part of the month is just about to begin. Well, we've already had the Google or the Alphabet and the Tesla earnings, which make it exciting, but next week gets even more exciting. Of course, I'll talk about that on Friday's show, but wonder what's going on. You know, we've had conversations with some of our guests who are of the belief, as I am, that some of these valuations are getting so lofty off the expectations of AI delivering some amazing efficiency and productivity boost. But again, a lot of that's going to take some time. And what we saw was a pretty great tech sell-off today. I was very happy with the way today went. I had some short positions on the NASDAQ on a break of that opening range breakout, which was awesome. I made one last-minute choice near the end of the day, which was I closed them out before the end of the day. I thought about taking them home overnight. Was really debating kind of continuing this slide to the south side because I think you're going to see more profit taking, particularly next week. I think that's when we'll see a little bit more downside movement here, but it may open the door to some great buying opportunities going forward. So tech turmoil is my discussion for show 953. Now, where did it start? Well, I don't have all the graphics I needed to for today, but really started with Tesla. I would say Tesla is the main kick, but then Google, as they rolled out their earnings, that just kind of helped this whole thing snowball downhill even further. So let's go over and look at the Tesla earnings here. We can check out that one after hours. In full disclosure, I did sell puts on Tesla today. I'll tell you about that in just a minute. Here is your, I'll keep it as a 5 minutes so you can see what happened as they came out with their earnings yesterday. So at the end of the market yesterday, they were already having a fairly ugly day. You can see it sold up in there. Here is your big sell-off in the after hours in this yellow slice or whatever color that is. And then you had today continuing that sell-off. Looked like it bounced a little bit and then gave up that ghost near the end, ending right near session lows and selling off in the after-hour session, down another 0.44%, but down, well, we'll call it 12.33% on the day. So a good opportunity for anybody who thinks Tesla should be going lower. You may see some here coming up in the short time. So let me bring up the daily numbers here so we can kind of see where it all stands. I sold the 205s. I actually really wanted the 200s. It was just a little bit better pricing, and I think it's more of a better zone. But I did sell the 205s, and that's kind of using this old prior area of supply, which ripped through, and using that as now a potential demand zone. For me to get down to that 205 level, again, I sold not this week, I sold next Friday, so I've got a little over a week to go. Another 5.1% slide to get me down to that 205 mark on Tesla, but the premium was pretty darn good. So I'm okay with that. Again, long term, I think Tesla's going to be fine. I don't know if anybody caught the press conference, but it really wasn't that bad. I mean, I think from what I'm hearing other people say was that Elon Musk's tone was very subdued. He wasn't very energetic like he normally is, and I don't know if that should be the determining factor on whether you want to be buying into Tesla or not. The numbers themselves weren't, I wouldn't say they were that bad. So if you look here, they were supposed to report 62 cents. They came out at 52. So yes, it missed by a little bit, which certainly means some profit taking. But again, I'm in the camp of this company is going to have a growth surge when the robo-taxi is released. I think that the car business is maturing. I think those profit margins are sliding, which I think is what you're witnessing here is the profit margins shrinking, and therefore earnings are shrinking down. You look at what's happened to Tesla over the past couple of months, and it's been a phenomenal run from those lows down here on April 22nd to that high we had on July 11th, 95% run. So yeah, there definitely should be some pullback in here for Tesla based off of that, and now their earnings numbers not coming out as rosy, but definitely a lot of talk about the robotaxi and robotic parts, but that's not going to come to fruition for some time. So I think if you are going to be trying to buy Tesla on these dips, if we get a deeper dip, understand that I think there could be more downside movement overall, but long term, which is what I'm looking at, I think Tesla will be okay. So be careful if you're jumping on that Tesla train, trying to buy some of this one. I've been meaning to call Don Fron to talk about him because he's the Tesla perma bull. Doesn't matter what happens, he'll be bullish on it, but I want to get him on here to talk about that as well, to see what his thoughts are on the current state of Tesla. So that was really your big trigger. I think that was like the shock because Tesla is just such this big, this juggernaut, if you will, even though it's not the $3 billion company that NVIDIA or Microsoft or Apple are, still a pretty large player out there. And of course, Elon Musk and his sway can cause all kinds of haywire moves. So that started things, and then I think the real piece that, at least for me, that kicked this off and further made people scared about what's going to happen going forward with regards to tech was Alphabet, or Google. Again, I will always call it Google. Here is the Google chart. We'll go GOG. Down 5% on the day. Now this, for a day where the entire market, right, when you had the NASDAQ was down 3.6%, yeah, it's not too bad having this one down only 5.03. Now, is this the point to buy Google or Alphabet? I'm not sure. I'm not going to make that statement. I'm not buying Alphabet at this moment. What I want to read you is a quote from Sundar Pichai, who's the CEO of Alphabet, and this goes back to the comments that I made, is AI, I believe, is absolutely going to change businesses. I believe that AI will completely change the way that businesses function, the fundamentals of them. Their earnings, I think, are going to get better and better and better. But I do believe this is going to be something that's going to take a couple of years to fully implement, maybe a year or so, at least to get what products and services do I use with AI to incorporate and make my company better, more efficient, more streamlined, and more profitable. That's not something that's just going to happen by flicking a switch. And remember, this whole phenomenon, which feels like we've been talking about it for decades, really started in December of last year with OpenAI. So we are absolutely in the infancy of this. And the challenge that I see as an investor, and I think some of you may echo this sentiment, let me know if you do or do not. The challenge I feel right now is I can almost guarantee, I know AI is going to have an impact on this business. I don't know how long it will take. But what I do know is that companies are spending billions. I believe the number for Alphabet was something like $2 billion on AI in the last quarter alone. Yet they're not reaping the rewards from that. So you have this huge capital outflow into AI-related components, trying to get your foothold there, and nothing to show for it. Right? That's, I think, what's going to happen next week with Microsoft, with Apple, not Nvidia, but Amazon. But Amazon's not in that space. But definitely with Microsoft and with Apple will be similar statements that Alphabet made. And here's what the CEO had to say. He says, I think we are in this phase where we have to deeply work and make sure on the use cases for AI products. On these workflows, we are driving deeper progress on unlocking value, which I am very bullish will happen. But these things take time. So the sky is not falling, technician JD. Sky is not falling at all. I think it's creating opportunities. Many of you have voiced over the past couple weeks that you felt that we're getting a little bit overvalued, that some of these stocks are getting a little too pricey. Perfect. Looking for a point to buy back in? Let these prices come back down to normal, a mean reversion, if you will. If you look out at the price charts of these markets, let's go just bring up the triple Qs, for example. I don't think anybody here would have any comment or any issue if I were to say we're probably due for a pullback and maybe even more than this. We talked about 10% pullbacks being healthy for the market. Well, we're already at 7.88% as we stand for the NASDAQ. And I'll be honest, I think next week we're going to see even more selling pressure as those main three names that I mentioned, Microsoft, Amazon, and Apple, report earnings. That's a Tuesday, Wednesday, Thursday release for those three companies. So be careful with that one. That could be a pretty wild week next week. So again, CEO for Alphabet, echoing my thoughts. I said it before he made this press release, but I'm saying it to you guys that I do think this is going to take some time. And, right now you're going to see on those earnings statements, a lot of people going, well, what do you have to show for all this capital expenditure for AI? We know that Apple's spending a ton of money on NVIDIA chips. We know that Microsoft is as well. So their numbers, I don't see any reason why they should be that different. Google has been using AI in some capacity, not to the extent of all these kind of groundbreaking services that ChatGPT rolled out. Yes, of course, they've had some sort of intelligence for their browsing and answering questions, etc. Now they're doing more and more of that. They've got Bard as well. But I think the actual making money off it and to justify the capital outlay, let's see, Google's power is in their opaqueness on both sides, their ad platform, publishers, advertisers, AI equals old. I don't know if I would get that. We'd get to 15%, call me. Well, what would that be? Let's check that one out here. 15% may not be that far-fetched. 15%. If you got a 15% drop, well, even if we got to these lows back here that we were only down in April of 2024, so just going back to last year's kind of low points, actually mid-year late points, That'd only be 17.8% to get all the way back down there. Does it get there? I don't think it does. Not a quick drop. Again, I really want to see what Microsoft has to say. I want to see what Apple has to say. And certainly when they roll out their iPhone, I'm very bullish on it for the tail end of this year, but I think we might see some struggles for the big names. And then we have a couple of weeks till this happens. But what about NVIDIA? I'm very bullish on NVIDIA overall, but when you have a company like Alphabet and Apple and Microsoft all having purchased thousands of these processors, hundreds or thousands of processors from NVIDIA to be able to harness this AI kind of revolution, yet they don't necessarily have those products and services built out to utilize that and get a reward on their money, will they stop buying these NVIDIA chips for a while? Will there be a slowdown in the sale of chips for NVIDIA? I mean, based off what Sundar is saying, it kind of felt like that was a statement he was making, that this might slow down the purchase of more build out. We've already got some infrastructure pieces. Let's figure out how we can make this and monetize it. I don't know. That'd be an interesting one to think about, particularly if you look at what NVIDIA has done. Here's NVDA, right? I had that line drawn at a 20% drop off the all-time high, and notice where we are right now. We're pretty darn close. Right, NVIDIA, from that all-time high to where we are right now on the close, you're looking at an 18.83% slide. 20% would bring you down to 112.56 would be that 20% drop for NVIDIA. We'll get to IBM in just a sec. We got a lot of earnings to talk about today, but this news today, not news, but these earnings numbers today for Alphabet and for Tesla just have me feeling much more bearish from a tech perspective. Not overall markets, just the tech perspective. Again, the gold rush, it feels like these companies may have rushed out there and bought, 50,000 shovels, but they've only got 20,000 people to start using the shovels. Well, you got 30,000 shovels wasted, waiting for them to be put to use. So in a crude analogy, that's kind of what I was thinking for. Hoping NVIDIA closes that gap at 97. Well, that'll be a hell of a gap fill. Here's NVIDIA again to look at that 97 gap fill. All the way down here, I'd be a buyer. I'd be a buyer, Steve, for sure. And as we start to see this fall, I think panic will set in. And for people like myself who really like selling and collecting premium as a simple way of earning capital, I think that NVIDIA might have some great opportunities here. But we'll have to wait and see what really happens. Again, next week is going to be a kind of a key one. It will be interesting to see if these firms specifically say anything about slowing down their capital outlay for AI-related products and services. That's how you make money. Sell shovels during the gold rush. Absolutely. And NVIDIA is the one selling the shovels. And what Sundar has basically said is we may have bought too many shovels, which doesn't mean it's going to be, a bust for Alphabet. It just means right now they haven't been able to monetize all those shovels that they bought, right? If I'm a gold miner and I buy a shovel for $30, I better be making more than $30 worth of rate of return on that shovel. Otherwise, it's a wasted business expense for me. Similar to the way I think these earnings came out today for Alphabet. It's kind of like, hey, wait a minute. We're not making enough money to cover what we put out there for AI. We'll see. Anyway, I wanted to share that, my 2 cents there. I know some of you are absolutely in love with Chipotle. Well, they came out with earnings as well. They came out, CMG was supposed to come out with 31 cents. They came out at 34 cents. They beat earnings because I ate there like 5 times last week. No, I didn't eat there that much. But here's CMG. Now, they're up 1.51% in the after hours. I was kind of debating myself if I wanted to, buy some Chipotle because I think that they're a fantastic company. I love what they do. They're fast, simple, and easy food. But this big sell-off here, I get nervous catching a falling knife into an area that's not a really strong demand zone. And I would argue that this, where it's in right now, is not a very strong demand zone. What I do like is the way that from its split, remember we talk about the split date, typically after a split date, share prices start to fall. And we've seen that happen. From the split date that happened on June 26th for Chipotle, that 10-for-1 split, Chipotle is down 21, almost 22% right now. So I may have missed that window as catching that falling knife, selling, collecting a lot of premium, and playing that bounce up. But they beat earnings. They were supposed to make 31 cents, came out at 34 cents. Now, I mentioned on Tesla how I was okay with the 205s because I'm okay owning Tesla long. And I got a great question today from Lee, which I will read to you on Ford's earnings. And here's that question. Lee says, Would you sell puts on Ford with the bad earnings announcement? It's back in a demand zone. Ooh. Well, let's take a look at that real quick. Ford. If you look at this chart here, I'll put a horizontal line where we are right now in the after-hour session. And right there, you have $12.14 is where we're at right now. That puts me right there. Okay. So the horizontal line represents where we are currently in the after-hour session. If this was a normal stock pulling back to that level, I might be interested. I really don't like what's happened before. Notice it really wasn't on a strong uptrend. From February of this year to June, it really did nothing but slowly go down. Then it had that breakout starting mid-June, had a nice rally up, shooting star, and has been falling ever since. They're down 11.19% right now on their earnings announcements. They were supposed to make 64 cents, came out at 47 cents. They missed pretty badly. I'm kind of like a Tesla miss. But if I zoom out further, why would I want to buy Ford? So Lee, the answer for me to your question right here, which is, would you sell puts on Ford? No, I don't have an interest in buying Ford. I don't have an interest in owning Ford, even though it's down over 11%. If I take a step back and look at that chart, it hasn't done anything directionally for the past 2 years. It's really just gone sideways. If you bought this in May of 2022, fast forward a little over a year, you would have bought this in May of 2022 at $12.16, and that's exactly where it is in the after-hour session. So, nope. I think it might be you, Lisa. I've got no data issues on my end. Google has been running their ad business, Google Ads and AdSense, using a branch of AI called machine learning, correct? Yep. And the point I was making, Tom, is that's cooked into their business. So AdSense and their analytics pieces are kind of baked products. All the other stuff is using AI for more of a customer forward-facing experience, right? Where you look at things like Bard. You know, you go out to any browser now and I type in a question, all of a sudden you can see a new AI prompt is giving me answers to that before it even shows me the search results. I think that is the area that they're pushing into. Yes, they are using AI. No one's debating that. They've been using language models and machine learning to do parts of their business. But they've also spent $1 billion $2 billion in the last quarter on AI improvements to make it even better, and they haven't done anything to that extent yet. They haven't taken existing services, made them incredibly robust. They haven't created anything fantastically new. So that's the struggle I think shareholders were ticked off about in the earnings call. Mine just dropped out twice, but all's good here in that. That's weird. I wonder why it was spinning. Because I don't have it on a slow process, and my internet is pretty good today. I check every day before the show now because of the weird delay sometimes. All right, so Lee, that was the answer to your question. I'm not buying, not interested in Ford, just not for me. And that was your Ford earnings. As I mentioned, they reported 47 cents per share, and they were supposed to come out at 64, so not good for Ford. All right, let's jump here to the next piece. Scott asked me, could you please talk about the Ethereum ETF? What will it do to ETH? You know, I had this question earlier today. I did an XLT session for Trading Academy this morning. I did the general session. XLT was on crypto and digital assets. In that, you know, this was a big topic. When we have the Bitcoin ETF, the spot Bitcoin ETF get approved back in January 10th, I believe, there was a specific action that happened. And you know, to understand what it would do to Ethereum, we have to understand what it did to Bitcoin, because it's that same process. You have something that is now going to be listed in exchange-traded fund products on the exchange, and that may bring in a whole new slew of investors. So I'll share the basics. I'm not going to go in depth like I did with the XLT today. That wouldn't be fair. But if we go out here and look at something like BTC, let me bring up my crypto, sort of by there. All right. So let's go back and look at this one here. The vertical line you see on your screen is the day the ETFs were approved for Bitcoin. You can see right here, you got that big vertical line. That's the day. And notice what happened. From the point those ETFs were approved, you know, the next day it rallied up, but it had a fall of roughly 21% over the next 12 days. So why is that? Well, in my opinion, that's a buy the rumor, sell the news. Because leading up into the official announcement by the SEC, there was a lot of speculation that that ETF was going to be approved. I am one of those people that said I thought it'd be approved by December of last year, and it didn't. And I said it's going to get approved in the first quarter. So what did we get? We got this. Look at the rally in Bitcoin going into that expectation from October of last year to when it finally did have their approval. It was a 79% increase. It did a 79% run up in just a couple of months or a few months on Bitcoin. All right. Then the announcement comes out. So it's buy the rumor, sell the news. And then something interesting happened. We had this huge move up in Bitcoin. And you can see here over the next 51 days, it moved up 91, call it 92% in 51 days. Why? This may answer this question from Scott, which is what will it do to ETF, or what will these ETFs do to Ethereum? Well, the reason I believe we saw such a surge in Bitcoin after that fall was buy the rumor, sell the news. In that couple of week window of time, people were now looking and talking to their financial advisors or making the moves themselves and saying, hey, you know what? I would like to add some exposure to my 401k, my IRA self-directed accounts. So I am going to now buy these spot ETFs and add them to my portfolio. And we saw a significant amount of increased demand. To this day, I think that the spot Bitcoin ETF is one of the largest inflows of any of the markets. So huge money pouring in. I think a lot of that was retail investors like yourselves, like many of you here, that were going, hey, I want to add some Bitcoin to my portfolio, but I don't want to hold Bitcoin. I'll buy the spot ETF. That way I know I'm going to actually be backed by real Bitcoin. So I think that demand took a couple of weeks to get in there so people could go to their advisors or figure out which ones to buy into, do a little bit of research, and now that floodgate was now open. On that same scale, how would that look for Ethereum? Well, let's see what ETH did. So here's your Ethereum chart, and notice there was a nice run up over the past couple of weeks. We'll just measure that one out for you. If I go from kind of bottom to peak here, we had a rally in Ethereum of 26% roughly over the last 18 days. And then all of a sudden on Monday, they said, we'll approve these 9 ETFs for Ethereum. And then it's been selling off. So it would not surprise me to see this sell off a little bit, at least for the next couple weeks. Why? I just buy the rumor, sell the news. People have been anticipating this one, and I think that this will probably have a little bit more of a pullback. And then what will happen is I believe we will see more people start to acquire Ethereum in their long-term accounts. Maybe diversify some of their crypto holdings in your IRA account. You certainly shouldn't have everything in crypto or in Bitcoin, but maybe spread it around a little bit. And Scott, that's what I think is going to happen. I think you're going to see a sell-off for the next week or so, maybe 2 weeks, and then start to move back up as not only retail investors start to acquire some of this Bitcoin, but we start to see more institutional investors, Ethereum. We see more institutional investors start to build positions in Ethereum. And then the next thing is there's talk about Solana coming out with a spot ETF as well. And that might be the next one to drop, but that is going to be a speculation piece. We'll have to talk about it at a later date. So it's pretty good. This is a pretty good thing for markets as a whole. The conundrum that I have, and the piece I've mentioned to you before, is how can the SEC still not say that Ethereum is a security or not? Remember, if it is a security, it has to meet all these different financial thresholds that it has not done yet. So it could be problematic for Ethereum. But the SEC won't approve Ethereum and say it's not a security, but they are now saying that you can sell a security on the exchanges that is full of this non-security or thing we don't know what it is. It seems kind of strange to me. So let me run through a little bit on the spot ETF. For those of you who might be interested in looking at the different fund families, grab yourself a camera and get ready to take a little bit of a screenshot here. This is the gist of it. Here's what we have right now. You've got a bunch of different ETFs out there. These are all spot ETFs. Now, 2 things you should notice here. The first one, yeah, exactly, Oliver. We don't know what it is, but make an ETF out of it because we have so much pressure on us. First thing you should notice is right up here at the top. Where's my cursor? Hold on a second. I always lose the red. There it is. You've got this under fee column. The Grayscale Ethereum Trust has a fee of 2.5%. So right away, if you guys are thinking about buying an ETF, forget about the Grayscale Ethereum Trust. Move away from that thing. Leave it alone. which means we now have all of these other ones, right? And most of them have a fee that ranges between 25 basis points and 15 basis points. So they're all pretty cheap to use. There's not a lot of cost for you to jump on these Ethereum ETFs. The other thing here that I find interesting, and this could be a play for you guys in multiple ways, notice that only one of them, if we look at the custodian column, the only one that's doing self-custody is Fidelity. So two things. Number one, when you look at the volume here, I sorted volume by yesterday's volume. Granted, that was the first day that they were live, the first day these ETFs were real. So there's not a lot of history here. So I just did this as kind of a starting point for these ETFs. We'll look at it down the road. But I believe that half of these will disappear within 6 months. They will just not be used. You don't need this many things to choose from, right? This is like, imagine these are all Coke, a cola, right? A cola. What do you need? Pepsi? Coke? Dr. Pepper's not a cola. It's like a weird soda. What else do you have? As far as like a Coca-Cola type product, you've got Coke and Pepsi. I think there's actually a brand called Cola, K-O-L-A. But there used to be a whole bunch of different colas out there. RC Cola. But you can't find that anymore. Ultimately, most of these are going to disappear. And I think, like I said before, the first one to go will be Grayscale because it's just too expensive. And then what you're going to get are the most popular ones. The third one on your list here is the iShares. That's BlackRock's ETF. That will probably be the most dominant one. Yeah, there it was, Lisa. RC Cola. It was not bad. It was okay. Generic Cola, RC. Thanks, guys. I got the slight delay on today, but yeah. I remembered RC Cola. The synapses in my brain weren't completely fried today. They did work, so I got that one out. So if you are looking, I did put the ticker symbols here in the column for you. My guess would be that your most active ones, the most successful ones, are probably going to be ETHA. That is the iShares Ethereum Trust. Fidelity, which is FETH. And where is the internet was built on Jolt? Oh yeah, Jolt Cola. Well, that one was a bit unique. Remember, Jolt Cola was double the caffeine. That was Jolt Cola's gimmick, man. I remember Jolt Cola. Wowzers. I don't think they make that anymore, do they? Jolt Cola, is that still around? Thanks, you're making me relive my high school days, Tom. Jolt Cola. Let's see if I can still order it. I guess it still is. Still is around. Huh. Funny. Back to this list. Again, for anybody who's looking at Ethereum, just make sure that what you're buying is a spot ETF. These are all spot ETFs. None of these are futures. Stay away from all the futures products. The reason I brought up Fidelity Ethereum Fund, which is FETH, is it's the only one that does self-custody. Self-custody means that Fidelity is now responsible for the safeguarding of that Ethereum. They have to actually buy it, and now they have to protect it. This is where it gets kind of sketchy. For those who know crypto, we got a couple of crypto enthusiasts in here and people who are pretty active on that one. If you have crypto, the riskiest thing to you is where you keep it. All of these companies here, except Fidelity, every single one of them. So BlackRock, Bitwise, VanEck, Franklin, 21 Shares, Invesco, they have all chosen to keep their Bitcoin or Ethereum at Coinbase. So this puts a lot of faith in Coinbase. Again, I've made the point, I believe Coinbase is probably pretty solid. I can't imagine them going under. The big concern a couple years ago was that they were going to be going bankrupt. There was a thought they were burning through cash. Once we turned that corner in 2022, everything was fine with Coinbase, and now most of these firms are putting their crypto with it. Let me ask you guys this. From a business perspective, let's say you've got a financial firm. You guys all run a financial firm. It's your financial business. And you had, let's say, $5 million worth of assets you were managing for different people. $5 million. And all of a sudden, you now have $50 million. Does the value of your company go up? Is that good for your company to go from 5 million assets under management to 50 million? Is that good or bad for you? Typically, a lot of financial firms are valued by AUM, assets under management, because the more money they have in their hands, the more they can do. There's more flexibility with what they can offer customers, the games they can play with that money to earn extra yield for themselves. So in reality, this should be great for Coinbase. And you might remember a couple years back, we talked about Coinbase and the potential there. And I've got so many little things I just chickened out on, which is pissing me off. But if we go back here into 2022, guys, I was telling you, I like Coinbase long term. And unfortunately, I was so preoccupied, I didn't buy off my own advice, which is wait for it to make a new high, which would have been when it broke above back in August of 2022. That would have been the first time it actually broke and made a new high. Of course, we could argue that it's stuck there for a while, and now we'd have to go back and go for the higher high. But right now, Coinbase has been on an absolute tear. It's been doing great. And why? Because they now have so much money for all of these firms. We're talking billions of dollars of assets. Oh, there's my joke cola. You're talking billions of dollars worth of assets are now being held at Coinbase for all these firms. And it's not just the Ethereum that they're holding. It's all the Bitcoin as well. So this is, in my mind, a very positive thing for Coinbase. I kind of regret I didn't load the boat back then when it was down in the $40 range, but I didn't. I guess the big question is, how much higher does Coinbase go? Now you have the two biggest cryptos, excuse me, each being held, a bulk of them for these major firms being held at Coinbase. That's huge. All right. As volume of fees, yes. And again, I'm pretty sure that there are being some fees charged to these customers for that responsibility of custody of those assets. Plus, it also gives them a lot more liquidity. I know, Lori, shoulda, coulda, woulda. Means nothing. Move on. I look back and I just go, goodness gracious. It's like my short trade on the NASDAQ today. Whatever happens tomorrow, I can't complain about it. If the market drops 5-6%, I can't be upset. I got out of my short position. It is what it is. Took the money that I wanted, and I was happy with it. So, move on. All right, so I think that is pretty much the main topics and questions that came in for me regarding yesterday, or regarding the news and events that happened overnight. Let me go and run through our top 8 here, just so we can see if anything has changed, which it really hasn't, other than maybe this NASDAQ chart. Looking at this NASDAQ chart, I went into my 1% accounts, and I was just about to start selling some puts for my 1% account, one of them, anyway, not the other, but one of the accounts I was looking to do some put sales on here. And I do like this current level that it's coming down towards, but I just don't feel comfortable doing it before we get to the big earnings announcements next week. And of course, I'm going to be on vacation, so that's not going to be a good thing. Notice where it's at right now. You look at triple Qs. We could make the argument that we are currently sitting in it never lets me do that, in a demand zone as we speak. Actually goes a little bit lower than that. Nice big ebb. I mean, how could you not? It was one of the most beautiful charts. Lucky I got in early on that one. When you look at the Qs, like if you go here to 5 minute, all right, you had the opening sell-off. It bounced up a little bit, and all of a sudden just continued. I mean, this was a gorgeous day. This is one of the rare, it's a rare day to get something that just trends and trends and trends and trends and trends and just keeps on going. But I dumped it at the end of the day just because I didn't want to take that chance. I just feel like there's so much uncertainty. There's so much volatility in this marketplace. I'd hate to come back in the morning and all of a sudden, it rips up and I end up being a loser on that trade. So I took that bird in the hand. Forget the two in the bush. I went for the bird in the hand today, and that's been kind of my mantra for the past couple weeks, is just take little chips out here until we get past this election because it's just too volatile. Merlin, these crypto ETFs, Fidelity insured, meaning is it safer in general? That's a great question. I don't know if they're insured. I would imagine there's got to be some sort of protection on it, but I don't know. Going back to that discussion, and thanks for bringing me back to that, technician. I get a little bit sidetracked sometimes. Blue Diesel. Coinbase, I don't believe, is insured. And now it brings up the question, how is Coinbase custodying those assets? We're talking billions of dollars worth of Bitcoin, billions of dollars worth of Ethereum. I mean, that's a lot of money sitting there. How is it protected, right? Is it somebody just literally sitting there with a nano ledger like I have here, and one guy's got the seed phrase? Is it in external vaults? How are they protecting them? That's the concern that I would have. So these firms are trusting Coinbase, which I would make the assumption, and it's an assumption, that Coinbase right now realizes that their security is their biggest concern, right? Customers not getting in, who cares? If customers have problems, that's fine. Let the customer struggle. But they have to protect those assets at all times. If there was a breach of Coinbase and somehow a large amount was stolen or moved, that chart would come crashing down in an instant and the whole business could come falling apart instantly. To me, that's kind of a little bit of a red flag for trading Coinbase. Now, I would think that there are measures put in place. I can tell you that if I was the CEO, it would be my number one concern. Without question, I'd bring in the top-notch people in the world. I'd hire external agencies to make sure we had everything encrypted, firewalled, protected to no end, making it impossible for someone to get in there. So I don't know how they're protecting it. All those companies I just showed you are using, let's go back here, all these companies on this list except Fidelity are trusting Coinbase. Fidelity, it's kind of interesting. I'd like to know the logic. I like what Fidelity is doing more because Fidelity is saying, we'll trust ourselves. We'll trust ourselves to do it. Now, again, that's a double-edged sword because who do you think has more experience protecting digital assets? I would argue it's Coinbase. So, yeah, I don't know what's the safer way to go here. My experience in this, which I believe this has happened already a couple times, is that if Coinbase gets hacked and something gets stolen, you're not going to know about it. Coinbase will just honor it. They'll replace it. They'll take that hit. I've heard of that happening in the 2014 where they were hacked and some crypto disappeared. Like, no, we got it. We're covered. They made sure that people felt safe and comfortable using Coinbase. So any hack, certainly of a large scale that gets into Coinbase, could destroy that business forever. So I like Fidelity's approach, but again, when you're picking which one to buy into, if you are looking at this Ethereum ETF, I don't know what to tell you. I can't give you a recommendation on that. I would say I'm either going to go with the iShares, which would be ETHA, or FETH, mainly because I like Fidelity's approach. I like that they're pro digital assets and crypto, and they're doing self-custody. They've got decent volume, and they're the same fee charge as BlackRock. Now, some of you might be looking over here and go, well, why wouldn't you go with the Grayscale E-mini Trust, or we'll go with the Franklin Ethereum because they're 0.19. I actually like Franklin a lot. I think their marketing is great. I think they're fantastic. I love their marketing, and they've been very pro-crypto. But look at the volume. 600,000 shares traded on it yesterday. I'm going to keep this and revisit it probably in a couple months. Because, again, my idea was in 6 months, some of these guys are going to be right around 100,000 shares or less and just slowly disappearing. And it's probably these bottom four, which would be VanEck, Franklin, 21, and Invesco, Galaxy, will probably be the ones that struggle. You already can see which ones are the more active volume ones, and they will push to make that happen. Okay? Great questions. Excellent. What else do you have here? Oh, boy. I'm guessing your trade with margin. If you have any set rules for doing so, just curious. Nope. No specific rules. I mean, the trade this morning was on futures, so I don't really have any worry about margin. I just make the trade. I tell myself, here's the maximum I'm going to lose, map it out by supply-demand zones, and then I'll just go with that trade and set trailing stops and move it as I go. Simple. But everything gets approached with, here's my maximum risk going into that trade. I have to be comfortable with the number, and I've mentioned this one many times. I can lose $500 and not blink an eye. It doesn't even faze me. I wouldn't even think anything of it, like dropping a penny. Not to sound arrogant from a monetary perspective, but my tolerance to those losses has been, I certainly don't want to lose $500. But I think everybody here understands as a trader, you are going to lose at times. It's a guarantee. What you can't have happen is you can't have a loss that's so big that it psychologically damages you. We've had this conversation before, and I remember some of you voiced your opinions on this, that you've had trades that screwed you up, man. I was watching the documentary last night on Simone Biles, and she is one of the most impressive competitors, athletes I've ever seen in my life. I love watching gymnastics. I can't wait for the Summer Olympics. Oh, I'm so excited for Summer Olympics. I love it. I love when the world kind of puts peace on the table and says, hey, we're fighting right now, but can we just take a couple weeks off and let our countries compete in fun, friendly competition? Let's go. Hopefully that's what happens this year. If you didn't watch the documentary, it's okay. It was really, I feel like it's setting her up for disaster because, Simone Biles backed out of the Tokyo Olympics because something snapped, right? Psychological issue, which I can relate to. I've had a mental break, which is not a good thing. However, she's going back to the Olympics now. And, you go back to that level of competition that is the highest level of competition you can ever get in. Man, it's tough. And in her mind, I think it'll always be there. I really hope she does well. But, where's your stop loss as a gymnast? You just got to give it your all 100% every day. The difference you and I have is we can chip away at things. We can slow down. We can slow down our trading. We can decrease our shares or contract size. You guys have heard me many times go, I don't like the trade, I'm not taking it. Like the Ford trade, I don't care. And that trade could be the best trade of the decade, and I'd be like, I don't care. It just didn't work for me. I didn't want to take it. So all of mine has a number, and again, $500 has been the numbers I've used since the 90s as far as a maximum daily loss for short-term trades, and that was what I was planning on today. So I had a $500 stop loss in there today. Didn't even come close to it. Today was just screaming to the downside, added to it, and just was all in all a really good day. Anyway, I don't know how I got sidetracked into the Simone Biles discussion. I just think that I forgot where I was going with that one, but yeah. Can't wait for Olympics. Go Team USA. I know we got some Canadians in here. I'm sure you guys will do well as well. Let's see. What else did you guys say? With the markets down big today, crowd hung on its recent low. What price would be a good sign for the crowds? You mean CrowdStrike? You talking about CrowdStrike, Steve? I'm pretty happy the way CrowdStrike's going. So CRWD. It was interesting seeing today's downside move in the overall market, and I thought CrowdStrike might stabilize. It did drift lower. Again, I haven't. No, Rob, it wasn't that. So no, that's one that impacted all the gymnasts. I don't think that. I mean, certainly that was an issue. Not downplaying that at all. That Nasser deserves to burn in hell. But her issue was she got lost in the lights and something snapped in her head. And she talked about it that, they called it the twisties. When you're up there flipping and doing this stuff, all of a sudden she just couldn't land her jumps correctly, and mentally something had separated her. She couldn't focus, couldn't concentrate. And maybe that did weigh in a portion of it. But I think it's just, like in my experience, what happened with me, something snaps, something breaks in there, some little synapse in your brain short circuits, and then you're frustrated because you can't do what you used to do really well, and then you struggle. So she went through a lot of counseling, a lot of therapy, and it looks like she's got her head on her shoulders, and I can't wait to see her dominate. I mean, she has 5 moves that are named after her that nobody else has done. Okay, can you imagine being at that elite level of the world where every athlete in the world is the best of the best, and no one has completed 5 of the tricks that she has done? That's just incredible. Yeah, anyway. Yeah, exactly, Ricardo. She had what's called the twisties. Exactly, John. And you know what? I mean, this is a great parallel for us. Just lose confidence, momentum. I mean, when you go on a losing streak, what do you think happens? When Simone went to the Olympics in Tokyo and she started doing her jumps, she got lost in the lights and she had a bad jump. I don't think it was over for her at that point, but it got in her head. And then her next jump was worse. And then it just kept getting progressively worse and worse and worse. And I think what happened was it just got so in her head, she didn't have a way to get out of it. She didn't know what was going on. That was my problem. I had no clue what was going on, which is why I ended up getting medical attention. Now I know, and you can kind of try to, okay, here's what happens. Here's how I work with it. I'll get past it. And I'm hoping that she goes back better than ever. But yeah, mental breaks are brutal, man, especially if you're used to doing something and all of a sudden you can't do that, or it's not done the same way, and you're like, why? I've done this every single day. For us as traders, we have that same, that same problem. If you start having a losing streak, you lose confidence in your abilities. You feel like, I can't do this anymore, right? Oh, I suck at trading. I'm a loser. And all of a sudden you manifest that, boom, 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 downward spiral, your account's gone. The good news for you and I, unlike Simone Biles, is there is no spotlight on you. No one even knows you're doing this other than you and the people you tell. Simone was on every magazine, every TV show, she was the spotlight of the world for the United States. So very different pressures on her versus you and I. Unfortunately, because we are alone, we have to be the ones who make those changes and call out those changes. Like, I got to stop. I got to put stop losses, and I got to do this and this and this. So, the mental health issue, the mental health crisis, I would say, needs to be addressed. I think a lot of people struggle with mental health issues and they don't reach out for help, and that's really unfortunate. Let's see what else we got here. Kind of like Maverick when they lost Goosey. That was a fake story, okay? You have to be meant to right in anything you do, 100%. You know, one of the rules of my 10 commandments is, I think I have it written on my list here. I don't have them in here. Let's see if I have them here anymore. I think I cleaned up my office a little bit. Maybe not too much. It's still a mess up here. But part of my 10 laws is, if something's not working, don't trade. And that includes computers and your mental health, right? Mental health. That's why I admire players like Kobe Bryant. Absolutely. You know, to go out and play at that elite of a level day in and day out. Like for me, mine would be Steph Curry. I love Kobe Bryant, but I just love Steph Curry. I think he's one of the nicest guys in the game and just an amazing shooter. But to come out and do that every single day, man, that golf. I know we got some golfers in here. I think golf is the most boring sport in the world to watch. God, what a torture. But to play it, go play a round of 18 holes and tell me you don't have an appreciation for any of these professional golfers that can hit that tiny white ball that far and with such accuracy over and over in rain, wind, snow, psychological. I mean, that is the ultimate test of human emotion and discipline is golf. If you're playing, not watching. Don't worry about watching. She's been at the top. Same thing with that tennis player, Asian mix. Yep. Any elite professional goes through those things. All right. Bear markets after earnings, short and supply zones, down almost 4%. Get some help. Well, if you're down that much, then yeah. Or just put your stop losses in place. You shouldn't be down over 4%. Okay? You know, when you saw, if we go back to our dailies here, let's run through our top markets. I got sidetracked again, but we're getting near the tail end of the show. You know, we had that big sell-off about a week ago, and then all of a sudden we came down to that area of demand. We bounced for 2 days and then just ripped right through that one today. You know, again, I am of the belief that we are going to be going lower. I didn't put my money where my mouth is because I did not carry my short positions, you know, my future short over the weekend, or sorry, overnight. But that's okay. We'll see. I'll just try to do shorter term trades tomorrow if it pans out. But 3.62% slide is pretty dang significant. And take a peek at some of these indexes. We talked about those ETFs yesterday. You know, a lot of them were down big. Look at technology, down 4%. XLY, which is consumer discretionary, down 4%. By the way, I did close out my XLY. You guys know I was directionally short on XLY. I had the August 16th out there. But today was just such a beautiful move. I had the 180. When it broke the 188 mark is when I actually purchased those directional shorts and closed that out today. No real rhyme or reason other than it was down so much today and the premium was so good to get out of those puts, so that was fine. Let's see, back to the top here so we can kind of run through. So S&P also down pretty significantly, and I think this is very important because if we look here, John, you cannot, let's see, you're going to make this a sports show. There are only 7 players in the history of the NBA, seven times, not players, but 7 times in the history of the NBA, John, that a player has shot more than 300 three-pointers in a season. This is a very long history of the NBA, and only 7 times has a player shot 300 three-pointers or more. Out of those 7, 5 of them are Steph Curry. 5. James Harden did it once. Klay Thompson did it once, and he barely made it above 300. Steph Curry has, like, I believe 403 made three-pointers in a season. That's incredible. He has redefined the game, and not only that, but he's a very humble person. He's an amazing, unselfish player. So Caitlin is absolutely amazing. She is incredible. I'm not taking anything away from Caitlin, but don't be saying Steph Curry my tuchus. He is an amazing player. All right, so why is this so important for the S&P today? I had that yellow box in where I was expecting this market to stall out today. And look what happened. This is not a good look for our equity indexes. Let me take those those lines out. This means to me that there's a pretty good chance we're going to go and close this gap. That would bring the S&P down to 5427.5, and that's actually very realistic number. That's only 0.83% away from current level. I mean, no, not that far off. I mean, that is a very highly likely that we could get down to that area, close that gap. I know a lot of you are looking at gaps as buying opportunities to rip that thing to the upside. So this one is not good. This would have triggered, in my opinion, more selling pressure, and that may be why we saw such nice momentum on this today. But we didn't even bounce. We didn't even attempt to bounce today on that S&P. Looks to me as if we'll get some follow through tomorrow, although we don't have any really big name earnings that are going to shock this, other than maybe just momentum and follow through. Oliver says, I got SPY going to 541. Let's check that out. SPY. 541? Yeah, and that, oh, you're at 541. Yeah, you're at 541 right now. Make sure you actually bounced off of that. And that's that bottom range right there. I would be more inclined to think you're going to end up closing this gap, which is going to bring it down to 537. But hey, little here, little there. Who cares? Next on my list, moving up. I want to make sure we get through all these before the end of the show. The Russell, little bit of a give back. It erased almost 2 full days worth of gains for the Russell 2000, down 2.10%. But technically, there's nothing there. There's nothing that's that exciting like the Nasdaq or the S&P. Your dollar index was down ever so slightly, down 0.13%. The 10-year. We had today a fairly decent up move. I'll get you the percentage here, and I just want to, I'm just saying this to rub it in Big Eb's face because Big Eb, we got to have some camaraderie going here. 0.80% gain, but again, I told you guys a bet man would say we're probably going lower on this yield right now simply because trend is your friend to the bend at the end, and we'll see. We got till December to make this one come to fruition. And Big Eb, we didn't really clarify this. Does it have to close below 4% by the end of the year or just go below it by any point? I'll give it to you. If it goes below at any point between now and the end of the year, I'll buy you a beer. That's how generous I am, Big Al. That's friendly competition over here. All right, almost to the top here. We talked about the Bitcoin move. Nothing here is technically is that interesting to me. I am keeping these yellow boxes here, which would be, which is going to be that next area where I think we might bounce off of. We had a little bit of an up move today, but it's only 0.21% move to the upside. Your gold market, 0.35% move up. Again, I don't see anything here that's that noteworthy, so I don't have any real play to call out here on that one. And then crude oil. We did get a bounce today. I actually wanted to go lower. I'm waiting for this lower demand zone on CL, which is going to be right around 75.67. Today we had a slight move up in crude oil, 0.82%, finishing at 77.59. All right, we've covered a ton of stuff. I've got a few minutes left here. Let me run through what's happening for tomorrow. Yes, I will be doing a show for you guys tomorrow. We do have advanced GDP numbers. This is the first of the next quarter. Remember, there's the advanced is the first one, then there's the preliminary, which will be next month, and then in 2 months, we get the final, and then they rotate all over again. Look at the numbers here. This could make the markets fairly happy if we do get this number. 1.4% was the previous quarter's reading of GDP growth, and now they're expecting it to be 2%. That would be good. Let's look at the long-term picture here, though. Until we just delete these long spikes up and down from COVID, this is going to take forever to look better. But let's just go after that and go into here. All right, so while it sounds great, 2% doesn't really bring us up that high relative to where we have been for the rest, for most of the year. Here is 2% where my cursor is at. We'll take it, right? I'd be happy to get 2% on that advanced GDP number. But who knows what will happen. That's your big news happening tomorrow. You also have the durable goods orders coming out. That will be before market opens at 5:30. And then later on during the day, natural gas storage, which has just been, UNG has just been brutal. Let's go UNG. This has been absolutely just a bloodbath for anybody who's trading UNG. We've had a 37% slide in natural gas prices in 24 days. Pretty brutal. If you're trading Boyle, it's even worse than that. Ricardo says 7 consecutive quarters of growth is not bad. True, but is it 7 consecutive quarters? Let's go look at that again real quick. Hold on a second. It may be 7 consecutive quarters, but we're seeing declining growth, right? Yes, you're seeing it above 0. Yeah, I always want to have that. But now you're seeing it, the last 3, we've seen declines in it. So the expectation is that this will have stalled and moved to the upside. That would be a piece for the market to rejoice over. But yes, you definitely want to see this above 0. Most of the time we are. Right? We usually don't get too many times where it's below 0. I'll just scroll back in here. You guys can see now I'm going from 2011 to 2021. I'll just scroll over here. Here's back in 2009. We had 4 quarters where we were down below 0. Back here in 2002, we had 1 quarter. Other than that, we're always above 0. Always above 0. UNG last week's low was 13.58. Yeah, and it could go lower. At some point, natural gas is going to surge. At some point. Just getting back to the point where it's not worth it to store it, burn it off. So I think natural gas will probably start to move, but I just don't know when, and it's too dangerous to jump on. I don't see any buy signals here. for natural gas going forward, at least for right now. All right, so we got your economic calendar. I gave you your earnings calendar as well. Earnings for tomorrow. Let's just bring up those bad boys. We already got Wednesdays, which is AT&T and Ford. Here's for tomorrow. You got AbbVie, Valero, American Airlines, Northrop Grumman. I am out of my AAL position, so that's fine with me. But your defensive play will be Northrop Grumman tomorrow. Other airlines, you've got Southwest. You also have Union Pacific. So a lot of interesting earnings announcements for tomorrow. But none of them, I think, are going to be as groundbreaking or shattering like Tesla and Alphabet were yesterday. All right, that's going to do it for me, everybody. Hope you enjoyed. If you got something you want to discuss for Thursday's show, let me know. I've got Thursday, Friday, Monday, Tuesday, and then from Wednesday on, I'm gone. Wednesday the 31st to the 8th of August, I will have no shows. Done. Sugar is getting clobbered. A lot of these commodities are. And again, that might be something that really impacts. Let's talk about that tomorrow because I don't want to dive into that one right now. Give me an hour show. Nice try, Big Ab. Nice try on that one and try to get me to do an hour show. That was clever. I didn't fall for it, Big Ab. We'll talk about commodity prices tomorrow because there's been a pretty significant slide in a lot of them. But yeah, from the next Wednesday to the 8th, I will be gone. Sorry, but I will be out of town. So get all your questions in before then. Email me at TraderMerlin@gmail.com or put your comments down on any of the YouTube videos. Thanks, everybody. I will see you tomorrow.